Welcome back. Over 4 billion XRP just vanished from exchanges since October. The price did not move. Nobody is asking the obvious question, who took it and why. Today I'm going to show you. A small group of wallets has built the largest XRP position in this asset's history. They now control roughly 1 out of every 3 coins in circulation, 32%, a record. So let's break it all down. Back in October, crypto went through one of the worst single-day liquidations on record. Retail panicked. At the exact bottom, a specific group of wallets started buying and never stopped. On-chain analysts call them mid-tier whales, wallets holding between 10 million and 1 billion XRP each, not day traders, institutional-scale conviction money. Since October, this group has added approximately 4.09 billion XRP. At today's price, that is a position worth more than $5.5 billion. It did not arrive in one purchase. It arrived in patient waves, week after week, while the price ground lower and the headlines got more bearish. As of this week, that whale class controls roughly 32% of circulating supply, the highest concentration ever recorded for this group, not this year. Ever. But before you react, let me show you what the blockchain actually reveals. And the numbers here tell a story that is impossible to ignore. Pay attention to these next 3 data points. They explain the setup. 1. The amount of XRP sitting on exchanges, meaning available for sale, has dropped 16.28% since February of last year. Picture a grocery store where the shelves quietly empty by 16% while the same customers walk through the door. 2. On a single day in early March, $738 million worth of XRP moved off exchanges into cold storage in 24 hours, one of the largest single-day outflows ever recorded for this asset. 3. The Binance scarcity indicator, which measures available supply on the world's largest crypto exchange, just hit 0.59. The highest reading since 2024. The tank is running dry. Stack those 3 on top of each other. Less XRP on exchanges, massive single-day withdrawals, the lowest Binance availability in over 2 years, and the biggest whale class in XRP's history, quietly building a 32% position. This is not random. This is coordinated long-duration positioning by people who do not lose money very often. Now bring in an outside voice. Jeff Kendrick, head of digital asset research at Standard Chartered, one of the largest banks in the world, currently holds a year-end XRP target of $2.80. From today's price near $1.34, that is more than 100% upside. His report explicitly cites whale accumulation and shrinking exchange reserves as 2 of the 3 pillars supporting that target. The third pillar is regulatory clarity, which brings us to Washington. The Clarity Act, the bill that would permanently classify XRP as a digital commodity under federal law, has been stuck in the Senate Banking Committee. The House already passed it last summer, 294 to 134, massively bipartisan. The Senate has been the bottleneck. Here's what changed. The Senate returns from Easter recess on April 13th. The Banking Committee is publicly targeting a markup vote in the second half of April. There is a Clarity Act roundtable at the SEC on April 16th. Polymarket, where real money bets on real outcomes, currently prices passage this year at 72%. Brad Garlinghouse, Ripple's CEO, personally puts the number at 80. And here is the connection. If Clarity passes, Standard Chartered projects between $4 and $8 billion in new ETF capital, institutional money that legally cannot touch XRP today. Pension funds, endowments, bank asset managers. The day Clarity passes, that compliance barrier evaporates. So ask yourself the question the whales are already answering. If you knew with reasonable certainty that $4 to $8 billion of forced institutional buying was about to hit a market where the available supply has already dropped 16%, what would you be doing right now? You would be doing exactly what they are doing. Now, this is the part most channels won't tell you because it complicates the narrative. Here's what jumped out at me when I went through the filings. If everything I just told you was the whole story, XRP would already be at $3. It is at $1.34. Somebody is fighting back. American spot XRP ETFs bled in March. About $31 million walked out. Total assets under management dropped from a $1.24 billion peak in January to roughly $947 million now. Weekly inflows have collapsed from the $200 million pace at launch to under $2 million per week. The institutional pipe that was supposed to pour money into XRP has slowed to a drip, while whales accumulate on-chain, retail-facing ETFs are bleeding. Two opposite stories in the same asset at the same time. Let me pull back. In plain English, big patient money is buying at the lowest prices in 6 months. Small scared money is selling. The price sits still while the two forces fight. Now let me talk about what is actually controlling all of this. But none of this exists in a vacuum. The force controlling XRP right now is the Federal Reserve. Everything I just told you, none of it matters yet. Here is why. The single biggest reason XRP cannot break out, even with whale accumulation, even with clarity around the corner, even with shrinking supply, is the macro. 3 forces. 1. The Federal Reserve has refused to cut rates all year. U.S. inflation is still sticky. That keeps borrowing costs high, the dollar strong, and risk assets pinned. The next Fed meeting is April 28th and 29th. The market currently prices essentially zero chance of a cut. 2. The U.S.-Iran war is technically active under a 2-week ceasefire brokered by Pakistan last week. That ceasefire pushed Bitcoin briefly above $72,000 and triggered $657 million in liquidations in 24 hours, 63% from short positions. But it is a ceasefire, not a peace deal. If it breaks, oil spikes and risk assets collapse. 3. This week, full reciprocal tariffs of up to 50% took effect across more than 50 countries. The biggest single-day trade policy shock of the year. It pushes U.S. prices higher, which gives the Fed another reason to stay hawkish. All 3 forces pulling in the same direction, all 3 pulling against XRP. Now look at the contrast. On one side, clarity at 72% odds, whale accumulation at a record high, exchange supply at multi-year lows, a $2.80 target from Standard Chartered, Japanese banks running live XRPL pilots out of last week's Tokyo conference, sub-4-second settlement, 60% cost reduction versus SWIFT on Southeast Asia corridors. XRP led global crypto ETP inflows last week with $120 million, the largest share of any digital asset. All of this is real, and yet XRP is at $1.34. 6 straight red months, down 64% from its all-time high. Fundamentals set the destination. Macro sets the timing. Until the Fed pivots, or the war ends, or both, the fundamentals just keep stacking. These are the numbers the institutions are looking at right now. The XRP ledger is processing real corporate volume. Exchange available supply is at multi-year lows. The whales are still buying. And here is what makes this complicated, because if it were simple, the price would already be higher. 2 real risks. 1. The ETF bleeding is not slowing. If clarity gets pushed past May, and Senator Bernie Moreno explicitly warned this week that midterm politics kill the bill if it does not reach the Senate floor by then, the outflows could accelerate. 2. The descending channel from the mid-2025 peak above $3.50 has not been broken. Bollinger Bands on the weekly chart are at their tightest in months. A big move is coming. But it could go either direction. Let me show you the 3 zones where supply swallows demand. Picture 3 steel doors stacked above the current price. The first door is at $1.38, the 50-day moving average. To get past it, XRP has to absorb every trader who bought in the last 50 days, waiting to break even. The second door is at $1.45. Roughly 60% of the entire circulating supply was bought around that level. A wall of sellers waiting to escape this 6-month grind. The third door is at $1.88, the 200-day moving average. Above that, the market structure for XRP flips from bearish to bullish. 3 doors, each thicker than the last. What breaks them? 3 things in combination. Clarity passing the Senate Banking Committee markup this month. A real ceasefire turning into a real peace deal. Any signal from the Fed that rate cuts are back on the table. Anyone alone might crack the first door. 2 in the same week crack the second. All 3 shatter all 3. Okay? You've just absorbed more real data in 15 minutes than most XRP channels give you in a month. Now let's turn it into something you can use. All right, let's make this actionable. Information without a plan is just noise. 4 signals. Watch them like an air traffic controller. Signal 1, the Clarity Act markup vote in the Senate Banking Committee, targeted for the second half of April. Senate returns April 13th, SEC roundtable April 16th. Markup vote is the trigger. Passes committee, green light, pushed past April, yellow, pushed past May, red. The bull case for this year takes a serious hit. Signal 2, whale wallet behavior, the 32% number. Track whether it keeps climbing. If those wallets keep adding through the next 2 weeks, smart money is not blinking. If they unload, that is your earliest warning sign that the thesis is breaking. Publicly verifiable on CryptoQuant and Glassnode. Signal 3, price levels. A clean daily close above $1.38 that holds for 3 days opens the path to $1.45. A clean daily close above $1.45 that holds for a full week opens the path toward $1.60. Below $1.28, the support that has held since February breaks. Next stop around $1.15. Signal 4. The Fed meeting on April 28th and 29th. You're not watching for a rate cut. There will not be one. You are watching the language Powell uses in the press conference. If he opens the door even slightly to a cut at the next meeting, every risk asset rallies and XRP rallies with them. If he stays hawkish, the macro vice stays clamped down for another 6 weeks. Bull case. Clarity passes committee. Ceasefire holds. Powell hints at cuts. XRP breaks $1.45, runs to $1.60, and Standard Chartered's $2.80 target moves from optimistic to plausible by summer. Bear case. Clarity stalls. Ceasefire breaks. Powell stays hawkish. XRP loses $1.28, drops to $1.15. Channel bottom becomes the next stop. You don't need to guess, you need to watch these 4 signals. So let me bring this all together. 4 billion XRP has quietly disappeared from exchanges since October. The largest wallet class in XRP's history now controls 32% of supply, a record. Standard Chartered sees 100% upside on a single legislative event. Clarity has 72% odds and a markup vote inside the next 3 weeks. The only thing keeping the price flat is a Fed that has refused to blink, a ceasefire that could break, and a tariff shock that just landed. The cleanest divergence between fundamentals and price I have seen in this asset in years. Either the macro shifts and the floor gives way upward, or the whales keep buying at a discount until it does. I'll be covering every development, the Senate markup, the SEC roundtable on April 16th, the Fed meeting on April 28th, every single day on this channel. Tomorrow, I'm digging into a piece of the Tokyo conference data nobody has touched yet, what those Japanese bank pilots tell us about the speed at which XRP could move from settlement experiment to settlement standard. I'll have the numbers, don't miss it. You're more informed right now than 95% of XRP holders. Use it. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Until next time, stay sharp. Stay informed.